XRP. In this case, we're using the 21-day EMA, basically flipping that into support for the first time during this massive acceleration, particularly after several months of just sideways range-bound activity, right? This basically had almost no upside and was just a hell of a lot of chop for 5 months or so. Now we get this massive extension. We're consolidating. We're using that 21-day EMA as dynamic support. The thing that you should be looking for now, in my opinion, is basically a breakout above this range, basically above 260.
This content is brought to you by VeChain, which is a leading enterprise-grade Layer 1 public blockchain spearheading a digital revolution from a sustainable, highly scalable smart contract platform. The VeChain blockchain has many unique features, which makes it an ideal choice for Web3 applications. VeChain is working with many great enterprises such as PwC, Givenchy, BMW, and Walmart China. Most recently, they partnered with the Boston Consulting Group to build a revolutionary decentralized application ecosystem. I'm a big believer in this project. I have been since 2018. I've been a VET token holder for years. And this blockchain is highly scalable, great with security and speed, and it has low energy consumption. If you'd like to learn more about VeChain, please visit vchain.org. Link will be in the description.
Welcome into the Thinking Crypto podcast. I'm your host, Tony Edward, and my guest today is Caleb Franzen, who's the founder of Cubic Analytics. Caleb, great to have you back on.
Dude, let's get into it, man. Every time we do these, it's like a bullish signal. So hopefully we get a little bit more fireworks here in the days and weeks ahead, man. But really excited for this. Let's do it.
Absolutely. You know, last time we spoke, Bitcoin since then went to 103,000. The market rallied really strong. We got a bit of a pullback, but today Bitcoin creeping back over 100K. You know, what was your first impressions about Bitcoin cracking 100K?
I mean, huge accomplishment from the perspective of, investors who have been in this space for a long time, dreaming about the potential for us to get to 100,000. But, it's like that classic meme of like, we're all super focused, like looking at the charts, we hit 100K, we celebrate, and then we go right back to staying locked in, So that was kind of the mentality for me. And I think, honestly, the most beautiful thing about this price action is that we've held it, right? We haven't seen necessarily a decisive move in either direction, but I think that's generally to be expected when we get basically a 50% move in a month, right? Or in 6 weeks. So I think it's beautiful that the market is digesting price action here. It's getting re-equilibrated at these levels, and investors now are getting acclimated to price trading here, getting ready, hopefully, for that next leg higher, right? Because we're in an uptrend. The trend is our friend. Asset prices trend. Like, we just know this for a fact. And so, in that backdrop, in my opinion, it's just a matter of time before we take that next leg.
Absolutely. So can you show us your Bitcoin charts and what you're seeing right now and when we may see the next leg up? Is it come January or maybe around Christmas we get that Santa rally, as they call it?
So yeah, let's pull up some BTC here. I'm going to share my screen. I have an XRP chart that we're going to get to, which is going to be absolutely fireworks. So I'm really excited to share that one. But the big thing for me right here, right now, is the fact that Bitcoin is basically defending its 21-day EMA, right? Mm-hmm. And why is the 21-day EMA so special? It's not. It's just something that I've used for the past 8 or 9 years as a technician. A lot of people use the 20-day EMA or the SMA. I thought 21 was a little bit cooler because it's a Fibonacci number. So here we are, we're using 21. And so generally speaking, what we see is that during really strong trends, we tend to use this 21-day EMA during this trend as dynamic support, right? And so far, the fact that we've basically cooled off, we haven't had a daily close below that level, right? So we basically have 1, 2, 3 daily wicks below the 21-day EMA, but we've continued to defend it. Depending on how price action unfolds for the rest of the day today, right, it's December 11th, we could quite literally have the highest daily close of all time for Bitcoin literally today, right? And look, maybe it doesn't happen today. Maybe it happens tomorrow. Maybe it happens on, what's today? Today's Wednesday. So maybe it happens on Friday. Maybe it happens on Saturday. Who knows? In my opinion, it really doesn't matter. The fact of the matter is we're in an uptrend. Prices are trending higher. We're using short-term dynamic moving averages as support within this trend. The market is consolidating. I think this is really important as well, right? What's the definition of an uptrend? A market that produces higher highs and higher lows. So by definition, half of the time we need to produce a higher low, right? Which by also by definition means we need to have a consolidation. We need to have a mini correction and an opportunity to produce that higher low so that we can go to the next phase, which is just a higher high. And so I think right now, my belief is that the lows of this recent move are basically over. Who knows? Maybe we get another decline back to 92, back to 93. Maybe we get down to 90. At the end of the day, guys, for me, genuinely, it really doesn't matter, because the fact of the matter is we continue to produce higher highs and higher lows, which is an uptrend, which only occur during bull markets. Bada bing, bada boom. We're in a bull market. I always learn that's the time when you make money as an investor, right? You have to make money as an investor by owning assets during bull markets. So this is a time to sit tight, enjoy the ride, and not get shaken out, right? That's going to be the biggest challenge here during the course of this bull market, is to not get shaken out. And I understand a lot of altcoins got really punished here in the past few days. We've given back a lot of gains. I'm a victim of that myself, right? My trading portfolio came back pretty aggressively in the last few days, and I've been loving this price action over the course of the last 16, 18 hours. But this is just what comes with the territory, especially if you're a trader in crypto, right? I mean, you have to be prepared for these significant ebbs and flows, liquidations that basically give us fuel for the next leg higher. So as I look at things right now, man, I swear to God, sometimes I really do feel like a permabull, but it's just, we are in the condition that is sufficient to be bullish and is paying off to be bullish. And so until those conditions change, Tony, we've been talking about this every single time I come on the show. When the facts change, when the data moves, when market conditions change, I will also change. It just hasn't been the case that I should be changing my perspective. So I'm going to continue to come on here and sound really bullish, not because I'm choosing to be bullish, but because the objective conclusions are telling me to be bullish. So I have to respect that.
Well said. Yeah. And I know that you are data focused. A lot of people, you view them on social media, they're very sentiment focused, and that's because they don't know how to interpret the data. And I know, I follow your newsletter, and you include a lot of things with the macro and so forth. So, and folks have to really change their mindset from the mainstream financial news and look at data and see what story is being told versus narratives.
For sure. And one of the things that I say is, I promise you, I could come on here and sound ultra bearish. The data exists for me to come on here, or any podcast for that matter, and sound ultra bearish. There are a myriad of data points for the economy that don't look great, that look outright bearish. But if we want to be objective analysts, and if we want to use macro, if we want to use this data point, if we want to use that data point, we need to come to the weight of the evidence. Our conclusion needs to be based on the weight of the evidence. So again, I can focus on these things and sound super bullish. I can focus on these things and sound super bearish. But if we want to be objective, if we want to be truth seekers in the market, and as investors, and make hopefully educated decisions, we need to look at the weight of the evidence, right? So, there's a lot of these people, I won't name names, not this time at least, who only focus on one side. And that's on both sides of the spectrum here, right? But I promise you one thing, I will always come on here and hopefully look at the weight of the evidence and an objective conclusion based on the weight of that evidence to guide my decision making in the market. And then on top of that, we've also talked about this before, right? Is that, everyone can have their opinion. But there's only one truth in the market, and that's price, right? So everything starts and ends with price. If we want to make money as an investor, we have to buy low, sell high, or buy high and sell even higher. And so by definition, everything starts and ends with price. So if we just focus on price action, if we just focus on technical indicators, if we just focus on price structure, that in and of itself is going to be a sufficient guide to make educated decisions in this market and to stay on the right side of the trend. And that's basically what I've done for the past 20 months.
Yeah, you've been spot on, man. What do you think the next major target is for Bitcoin? Let's say we consolidate here, right?
Nice.
And then we start moving up. What do you think that, and I know some people use Fibonacci, some people use Elliott wave. What do you think it might be?
So, I mean, we've talked about in the past how my target for this breakout move was going to get us to basically 95K. Let me just get this primed and ready before I share my screen. And look, we've hit that level now. I'll share my screen. Bada bing, bada boom. Okay. So, if we take the high to the low of that March to August consolidation, in logarithmic scale, that Fibonacci got us to 95,000. Let's just round up a little bit. So we're now holding above that level. You could even make the case that we've flipped it into support here. So I think one thing that we can do, and I don't do this too often, but a lot of traders have a lot of success doing this, is we could add the 200 and 61 point. Oh, I already have it on my screen. It's just way higher. So there it is, the 261.8. So that gets us to 142,600. I don't think we're going to have a straight shot of a 40% gain from here to get there. It's going to be ebbs and flows en route. You know, I've been very vocal that my price target for this cycle is at least 175. So that's telling you at least where I think we're going long-term this cycle over the course of the next, let's call it 8 to 15 months. But look, I think that 142 level does make a lot of sense. If we want to focus in a little bit tighter on this price action, this gets a little tricky here. We could produce a Fibonacci from the high to the low of the price action just a few days ago, and that gets us to 112. And so I think that's pretty valid for a short-term target. We can get to 112. And look, you know, we're talking about basically less than 12% upside to get there, right? It's not, that's not a significant move. That can literally happen over the course of over 12 hours, even 6 hours for Bitcoin, right? So look, I think keeping an eye there on that 112 makes a lot of sense. And if we want to be, you know, what's the word that I'm looking here? If we want to be, I'm literally blanking on this word, my bad. If we want to be really optimistic though, we can target that 142. And I think, you know, there is a statistical or technical justification for us to get there. And in my opinion, it's just a matter of when, not if. So let's see how it plays out.
You know, we've seen some historical patterns with seasonality, right? And that come Q4, you see these strong rallies, usually into January. Some of it continues, but then sell-in may go away summertime, but then come back September, October. Do you think it might play out like that? And obviously, we don't have a crystal ball, but that this thing you mentioned, you know, 8 to 10 months or so, that this thing might play out till late 2025.
Yeah, I mean, I think we're going to play out until late 2025. We could go longer, right? I think famous last words, but this cycle quite literally is different with the ETFs in place, and I think with Saylor executing his strategy at scale, and now a lot of these Bitcoin mining companies trying to do the same and replicate that. And so I know, for example, yesterday Microsoft voted against considering Bitcoin as an investable asset. That's okay. It's just a matter of time, in my opinion, but probably not happening this cycle. I would urge investors to be essentially to pump the brakes on that narrative. We're going to get those announcements that companies are going to be voting to consider it as an investable asset, but I hope I'm wrong. I hope I'm wrong here, but I don't think we're actually going to get any of those approved. And so, you know, I think that the maturity of Bitcoin is continuing to improve, right? In every cycle, this is true, which is that it's more mature than it was last cycle. The investor base is larger. There's been more adoption. The supply curve is more friendly to prices going up even faster, right? But I do think that the fact that we have this kind of like sticky capital, if you will, in terms of retirement accounts, being able to access Bitcoin and continue to allocate into it, that could elongate the cycle, right? So that's speculation. I don't know if it will. It's a possibility though. And so I think it's, you know, it's up to each of us as investors to not dismiss that possibility. And also to recognize if market conditions change, then we can change as well, right? So typically on average, the Bitcoin bull market peaks 18 months after the halving. And so that puts us at basically November of 2025, which means we basically have 11 months to rock and roll on average. So maybe we peak 8 months from now, maybe we peak 12 months from now. Who knows? Yeah, we'll see. But it's an important data point to reference for sure.
Yeah, absolutely. And, you know, as you always say, we can change our minds based on the data, right? And if things change course for whatever reason, macroeconomic factors, black swan events, whatever it may be, you know, all those things can change the timeline.
Exactly.
With regards to altcoins, can we look at Ethereum? Because we know ETH recently we broke through 4,000 again, but you know, with the pullback, went back below, and it's not far away from its 2021 all-time high.
Sure. Yeah. Look, I mean, I think ETH looks good. I've been talking about this now for a while, which is even if ETH improves, I think Solana still has the ability to be the faster horse in this race. Yeah. And so, you know, we've been talking about this Sol ETH chart now for quite some time. Let's talk about it. This is what I'm seeing on Sol ETH, right? So again, we had this beautiful breakout to new all-time highs, which occurred in August on a relative basis. We cooled back down. This is where I did my rotation out of Ethereum into Solana. That was when Solana was trading between 120 and 140. And then we had this beautiful breakout retest rebound setup and made new highs on several occasions, right? And look, I love seeing Ethereum participate in this rally. It's about time, right? You know, I'm not against Ethereum. We've talked about it again in the past. I think it was on the last show. I am not bearish on Ethereum. I am just more bullish on Solana in a market environment that is bullish, right? It's really that simple. And so now, given the fact that we've had this massive run in ETH and basically Solana has been just kind of consolidating sideways. It did make new all-time highs, but it hasn't been as fast as Ethereum over the course of the past month or so. But what that's allowed, what that's set up for is once again, another breakout retest rebound opportunity with a lot of clarity this time. We really got this beautiful extension. Now we cool back down. Guys, what I'm seeing right now is 31.6% implied relative upside for Solana relative to Ethereum, right? So this is a significant amount of potential, keyword, potential outperformance that can happen if this structure holds, right? So again, as I look at this market right now, let's also talk about Solana. What are we seeing here? We're seeing Solana rebound on its 55-day EMA, rebounding on the prior year-to-date highs, right? Beautiful price structure here. So not only on a relative basis are we seeing this, but we're also seeing it on an absolute basis. Just looking at Solana, we have the breakout, the extension. Now we're getting the rebound, and now we're getting that potential, the retest, and now we're getting that potential rebound opportunity. So both on a relative and absolute basis, I think here right now, Solana makes a hell of a lot more sense than Ethereum. And again, I just want to clarify, it's not because I'm bearish on ETH. It's just because I'm more bullish on Solana in a bull market environment.
Right. And essentially saying there's higher upside for Solana versus ETH, but it's not saying that Ethereum is not going to move. It is. It's just the returns, the gains, the percentage gains is going to be lower on ETH.
Correct. And by the way, if I'm wrong on that, I find out really quickly. Let me just share my screen on it again.
Sure.
Is because of the fact that, you know, we're right on that level for Sol ETH. If we fall below this range and we fall down into this zone right here, that would, I just got rid of it. If we fall below this, you know, dotted zone that I just put on there, that would look like a failed breakout, which means that Ethereum is continuing to gain ground against Solana and that my thesis is incorrect, right? So again, I find out if I'm wrong really quick. Trust me, in this game of investing and trading, you're wrong often, if not more often than you are right. And so the big key to success for long-term success as both a trader and investor, and as an investor, is minimizing your punishment or the cost for being wrong. And so I'm totally okay if I take this swing and double down on my Ethereum position, my Solana position instead of Ethereum. And if I'm wrong, again, I find out quick and I can rotate that capital back into something like Ethereum, right? So I'm totally fine with this. And, but this is where I think adding to Solana makes a lot of sense.
So Solana, I think we had talked about a price prediction like 900, 1,000, I think around that range.
Yep.
You still holding that potential all-time high?
Yeah, you know, I think when we had talked about that price target, I think BTC was trading somewhere around 60,000, right? And I was saying, look, if we get to my 175,000 price target, BTC basically has 3x implied upside. And that could maybe tell us that, you know, Solana has maybe 5x relative upside. And at the time it was trading around 150. So you just take 5 times 150, you get to 750, 800. You can maybe get to 900 if we use a 6x multiplier. So around that range to me still makes a lot of sense.
Let's talk XRP.
Let's do it.
It's going bonkers. I don't think anybody saw it coming. It's back in the top 3. It passed Solana on the market cap list, but we know these things fluctuate. What are you seeing on the charts? Is it looking bullish after that parabolic move or bearish?
Look, I think XRP looks fantastic. I got into it late, but I traded it on that upside move, and I'm out of it right now, so I don't have a position in XRP. Congrats to everyone who has been in it. I think this is the key structure you really want to be paying attention to. First and foremost, we have a bull flag type dynamic. I often don't draw my bull flags the same way that most people do. In this case, I'm using a regression channel. So with bull flags, if you're just using a trend line, you're going to have a lot of personal bias and subjectivity of drawing that trend line. You might draw a different trend line than I will, so on and so forth. But when we're using a regression analysis, it's a regression, right? There's no debate. It's objective. It is truth. It's statistical truth. And so what I'm seeing here is XRP, in this case, we're using the 21-day EMA, basically flipping that into support for the first time during this massive acceleration, particularly after several months of just sideways range-bound activity, right? This basically had almost no upside and was just a hell of a lot of chop for 5 months or so. Now we get this massive extension. We're consolidating. We're using that 21-day EMA as dynamic support. The thing that you should be looking for now, in my opinion, is basically a breakout above this range, basically above 260. And that would give confirmation, not only in terms of making a higher high versus this price level right here, but also for a breakout out of this regression channel. In my opinion, there's going to be nothing bearish about that whatsoever. And so my plan is to add back into XRP if we get that breakout. For those of you who have just been holding tight and sitting tight, I think you continue to sit tight so long as this price action shapes up the way I expect it to. If we fall below that 21-day EMA and have a daily close below it, you might want to consider reducing some exposure if you're more of a trader. If you're an investor and you want to sit tight, by all means, do whatever you want. I can't tell you what to do. But I think that price structure as a whole, that's bullish price structure. Get this massive move, massive multiplier. Now we consolidate. We use a short-term moving average as dynamic support. We start to get liftoff, and now we look for the breakout. We look for that continuation move. I think that comes probably pretty soon.
Do you have a all-time high price prediction for this cycle? Anything you can share on the charts there?
Let's just higher. I haven't done a specific number on this. So look, I think the interesting thing about Ripple is, and I'm not plugged in to the fundamental dynamics here, but I see these headlines, right? So not only do we have some different ETF applications coming down the pipeline. I think it was yesterday that whatever the stable coin is called for Ripple is now coming out or is getting approval or something like that. Again, don't quote me on this. Tony, you probably know a hell of a lot more than I do. But so, this is not news. Good things have been happening from a fundamental perspective for Ripple, basically providing a justification for this move up. This isn't just totally detached from fundamentals. Maybe it is, maybe it isn't, I don't know. But there is a fundamental story here that's driving price higher. For right or for wrong. So I think, the bias has to be up to the upside. But, Tony, you could ask me about any altcoin over the next 6 months. I think it's going a lot higher.
Yeah, well said. Total altcoin market. Can we look at that and to see where we're at? I think we rejected a bit, right? If I'm not mistaken, if I was reading the charts correctly, at near revisiting the all-time high from 2021.
Maybe we did. Let's go over this. I have another great chart here for total 3. In particular, looking at total 3, let's see, I want to make sure we're doing X stablecoins. This is it right here. So first and foremost, we had this beautiful breakout. I know I can't draw the horizontal range, but that's as good as we're going to get for the sake of this conversation. So beautiful breakout there, and we got that extension. This price structure to me looks fantastic. You might be very curious, what is this statistical indicator that I have here in the lower bound of this chart? This is the 188-day Williams %R oscillator. 188 days sounds super random, like I just pulled it out of a hat. But guess what, guys? It's half of a year, right? There's 365 days in a year. You divide that by 2, it gets you to 187 and a half. So let's round up. Let's just call it 188. So we're right here at 188 days on that Williams %R oscillator. The thing that's standing out to me, guys, I want to highlight here, when we get this oversold flash that occurred in the middle of last September of last year, what occurred after that was this massive oversold reading. I consider these to be momentum thrusts, right? And the way I see this is excessive amount of demand coming into this market. The thing that was very interesting for me, by the way, we saw that same dynamic just occur more recently, right? Where we got that overbought reading that just occurred here in early November. And you'll notice really good things have continued to happen after that overbought reading. The thing that was very interesting to me when I pulled this chart up this morning is look at this kind of like double dip where we fell below overbought just yesterday and the day before. That's very similar to what occurred on November 21st of last year, right? And look, I want you to pay attention to this as well, right? I've drawn this kind of blue resistance range where we got that massive extension, we cooled down for a little bit, and then we finally got that breakout move that gave us that next leg higher from basically November, December of 2023 into those highs in March of this year of 2024. So what are we seeing right now? We're seeing something very similar, right? We get this massive overbought reading. We see price continue to go higher. We get that kind of double dip dynamic. And now the confirmation that we should all be looking for is for price. This is total 3 excluding stablecoins, right? So this is minus USDT, minus USDC. If we can get above this zone, right, this is going to be super critical. That there, in my opinion, there would be nothing more bullish that we could ask for than this kind of second momentum thrust coupled with a breakout in terms of price action within a broader bull market, right? Broader bull market. Who knows? Maybe 4 months from now, we're seeing another one of these consolidations occur. I don't think, we'll see when we get there, right? I don't know. But all I know right now is we're going through this overbought period and there's nothing bearish about being overbought, right? And so this for me right here is giving, once again, an all clear in terms of altcoins looking really, really strong. So being positioned in alts here, in my opinion, continues to make a hell of a lot of sense. And by the way, I'm someone who a month ago was not saying this. So I've now shifted my perspective based on the data, looking at the statistical indicators, looking at Bitcoin dominance rollover, and saying, hey, I think we should be listening to this. Price is the arbiter of truth, and it's telling us a very important signal. We can either ignore it or we could try our best to take advantage of it and manage risk. And every single time, you guys, I'm going to take advantage of trends and try to manage risk. Like, it's really that simple, right? I try to find correlations. I try to find signals. I try to find opportunities, and then I just manage risk. That's it.
From the macro standpoint, right, with Fed rate cuts and we got CPI numbers, I think today, are you concerned about anything, or you think it's just business as usual and this bull market continues into, the blow off top and then things start to change?
Data looks good, so I continue to see the macroeconomic environment. I've been saying it now for 2 years, resilient and dynamic. I know that the pace of disinflation is certainly moderated, and basically the year-over-year inflation readings have been flat to slightly higher. But in my opinion, not to a degree that would back the Fed out of the rate cut regime. So, I think we're going to be getting that cut. When's the next Fed meeting? Is it this week?
Yeah, it's either this week or next week. I don't recall.
Maybe I think it might be today and tomorrow, and they're coming out. I don't know. Don't quote me on this. This is literally how little I care about the Fed right here, right now. And this is someone who studied the Fed for 11 years saying this. I think right here, right now, we know for a fact that the Fed is going to be cutting rates. We are in this rate cut regime cycle, and barring a material acceleration of inflation, the Fed is going to keep cutting rates, right? And so on a rate of change basis, the shift from a rate hike regime to a rate cut regime is accretive to asset prices so long as the broader macroeconomic environment continues to be resilient and dynamic. The non-farm payroll data came out last week, looked fantastic. The ADP private payroll data came out last week, looks fantastic. Wage growth is still super strong. We're going through a bit of a productivity boom. The Q4 real GDP data from the Atlanta Fed is expected to come in at 3.3% annualized real growth. Guys, there are data points I could cite where the economy doesn't look that great, right? But when we look at the weight of the evidence, the things that actually drive market conditions, things look like they're going to continue to support the uptrend in asset prices that we've had. And by the way, bull markets climb a wall of worry, right? So there's always going to be these risk dynamics that people can cite, but bull markets tend to climb them, right? Because typically those risks are overstated and over-exaggerated and don't come to fruition, right? So how long have we been hearing about cracks in the labor market? How long have we been hearing about the commercial real estate market? How long have we been hearing about the consumer and credit and all of these different dynamics and, the inverted yield curve and this, that, and the other? The leading economic indicators, right? Being in contractionary territory for 18 plus months, like all of these different things. I hate to say it, but I also love to say it. They just haven't mattered, right? We've been in a bull market. We've been in an uptrend. And for me, I'd much rather trust the market than trust these specific data points because the market and prices are the arbiter of truth.
Do you think, there's a saying, markets are forward looking, and despite, some of the things people may highlight, the overarching theme is the easy money cycle, cutting rates. And we know the quantitative easing or whatever they do with liquidity injections from Janet Yellen and so forth. the markets know they're going to keep doing these things because if they don't, we're going to have bigger problems, right?
Yeah, it's a possibility. And like, look, I see a lot of people on X or on different podcasts talking about, they believe we're going to go through some massive liquidity injection, some massive liquidity boom, as if the Fed is going to launch this bazooka of QE. That's not my belief, right? All I believe is that the Fed is going to moderately cut interest rates back towards 3 to 3.5%. And historically, if we have an effective Fed funds rate at 3 to 3.5%, that's significantly elevated versus where it's been over the past 20 years, right? The past 15 to 20 years. So that's still a relatively high level of interest rates. I hate to say it. And so, I don't believe we're going into QE. And if we're going into QE, it's because we have a recession, which certainly is not going to be accretive to asset prices in the short term. It might, juice the pipes for a bull market in 6 months after the recession. But, we should not be hoping for that, right? All we should be hoping for is a relative shift in the monetary policy regime, going from a rate hike cycle to a rate cut cycle where the Fed is moderately, patiently, and steadily lowering interest rates. They're not even buying assets in this environment, right? They're still doing balance sheet runoff. So they're quite literally conducting QT as we speak, right? But they're lowering interest rates. So that on net, it's accretive, right? And it's just that differential rate of change dynamic that's what's really helping asset prices in this market environment.
Caleb, always great insights, my friend. Appreciate your knowledge. Thank you so much for joining me.
Great to be here, man. Talk soon.